I said that global contagion is really what's leading to the market being in negative territory. Is it only the global situation?
Thank you, Lerato. Good afternoon. At close of market today, we actually saw the markets gaining slightly, close flat, gained 9 basis points today. We saw volume and value increase slightly as well today in the markets. The banking sector accounted for a large proportion of the market, accounted for about 60% of total market trades today. Volume increased about 3% and value about 12%. From what we've gathered, from what we can see in the market, we can actually see that we've seen increased volume and participation in the market, and especially in the banking sector, shows that Q3 results released into the market by corporates are quite attractive and interesting, and investors are beginning to react positively to this.
All right, results coming through. We've just spoken to the CEO of Dangote Cement, and of course, it's very important. Dangote, it's the largest capitalized stock on the market. 23% profit growth. Was that in line with your expectations?
Yeah, the profitability growth in Dangote Cement was even also past our expectation. Was very impressive and interesting. The bottom line and even the turnover were quite impressive. We could attribute this to an increase in turnover and in output from the company, and also an increase in the bag of cement in the market. We saw efficient capacity utilization by the corporate, by the organization throughout this year, maximizing their output capacity, with Obajano producing about 97% of its capacity and Boko producing up to about 55% of the capacity. Going into the Q4, we expect this to improve from Dangote, and now we expect to see increased performance from them and a better result. I expect this to translate into positivity into the capital markets.
Yeah, explain that to us, because like I said, Idris, it's the largest capitalized stock on the NSC, but the price is down 14%, other stocks on average down 18%. So even with good full year results that we might see coming through in the next quarter, will that lift the market?
Well, from what we see, we expect investors to go back and digest the results properly, and with this, in the next quarter, we expect this to have a positive effect on the market, because we expect to see more output, volume growth, and sales from the organization. And if this will translate into earnings growth by the organization, and with improved earnings growth, will lead to improved valuation of the share price of Dangote Cement. We expect the market to trade towards this value, and with the market trading towards this value, we expect this to have a positive effect on the capital market and the AS as it was, since Dangote Cement controls a large proportion of the market.
All right, another cement maker out with results is Ashaka Cement. Pre-tax profits at 15% for quarter 3. Some analysts also say this is beyond their expectations.
Yeah, we've seen sales output also in Ashaka Cement very, very impressive, though their earnings wasn't too good. But we expect the output and volume growth to increase for Ashaka Cement, and with this, we expect to see more construction work happen in the economy as a whole, and with improved construction work, we expect demand for cement to increase. And Ashaka Cement, being also one of the players in the cement industry, should have increased turnover, and with this, it should translates into good profitability for Ashaka Cement.
All right, now, comparatively speaking, you know, we've seen good results coming through from the banks. We're seeing good results coming through from cement makers. Some counters that have been active are pharmaceuticals like GlaxoSmithKline. So generally, a little bit of renewed confidence in the market. But in terms of asset allocation, what would you suggest?
Looking at all the stocks listed on the stock exchange and the Q3 results released so far, the banking sector seems to have released quite a lot of positive and impressive results. We've seen a lot of results also from the cement sector. And for me, looking at my stock picks, I would rather go into the banks, where the banks and the cement industry, where we expect to see improved profitability, improved earnings, and improved turnover from their books, because looking at the Q4, we expect them to continue to improve, and this will definitely lead to improved investors' confidence in the market and profitability at the end of the day.
But explain to us the discrepancies or the differentiation here, Idris. As you're saying, the banks are showing the greatest growth, and in terms of index performance over the last few days, the banks are up 4.5%, the food and beverage index is up 0.8%, oil and gas up 0.2%. For some of us standing in Southern Africa and the world over, this is surprising. I know that consumer goods are starting to drive the market, but I mean, to such an extent that oil and gas is just 0.2%?
Yeah, what we've actually seen in the banks is those investors willing to buy are not willing to, they're not being aggressive in the market, and they've decided to buy cautiously, looking at where the market is coming from and looking at how deep the market has fell before in Q1 and Q2. So what we've seen so far is investors buying cautiously into the stocks, especially the banking sector, which has not really helped the banking index to grow. Looking at the consumer space as well, the consumer index, we've seen quite a lot of demand in those goods, but generally as a whole in the market, investors have really been very cautious in the way they pick up stock. So we may not actually see an aggressive growth in all these sectors at the moment, but by the end of the year, we expect to see improvement from where we're coming from.